Hello and welcome. You're watching News 9. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. Our top story this morning as the offensive of Israeli forces in Palestine on Hamas continues. We are keeping a track of how global markets are reacting. To my left is Suyash Maheshwari. Suyash, it appears that Indian markets specifically opened in the green, and also global markets, US markets, also closed in the green. They have seemed to have factored in any sort of global turmoil this geopolitical tension could result into.
Absolutely, Shweta. So we are seeing a bit of rebound playing out across the global markets, except Europe, US markets, the Asian markets. US markets closed in the positive territory with about 0.5% gain yesterday. Asian markets also were posting strong gains this morning. Now, as far as the US markets go, Shweta, it opened lower yesterday amid concerns about the war. But there was commentary from some of the top-ranking federal reserve officials which suggested that the Federal Reserve is looking at the high yields, 10-year high yields in the US, which are currently hovering around the 16-year high, and this potentially could steer the US Federal Reserve away from raising rates, which was a major pain point for the global markets in the last couple of weeks or so. The Asian markets also saw a good opening today. As you can see, Kospi opened about 0.5% higher. Nikkei is currently trading about 3% higher or so. Even we saw that Israel Stock Exchange, Tel Aviv, saw a rebound where TA35, their benchmark index, was up around 1% after dropping about 5% yesterday.
All right, so a positive start there for a lot of Asian markets as well as Indian markets. Let's quickly get in our guest Kush Bohra of kushbohra.com joining us on the show. Kush, thank you for joining us. Good to have you on the show. I want to understand from you, was this anticipated, markets rebounding in the second trading session for the week? What are you making of the jitters that we saw in the global equities market as of Monday on the back of the massive geopolitical tension in West Asia?
Hi, first up, good morning, guys. It's so good to be here. Well, it was absolutely anticipated. I mean, perhaps if you would have connected yesterday, most of my commentary, in our advisory services and across, the media channels that I appear, was the fact that, we may be looking at a near-term bottom at 19,500, 19,450 kind of levels. Now, there were a couple of reasons for that. The first and the foremost was that, 19,500 had a very strong put base even on Friday, at closing. And what was heartening to see is that on Monday morning, that put base just sort of got strengthened. Even when the Nifty slipped below 19,500 for a brief while, we saw a lot of additions at the 19,500 put. So that sort of gave confidence that the market participants believe this to be a near term, but also a very strong kind of support zones. Also, from a purely technical standpoint, let me just keep the geopolitical news aside and all the kind of news flow aside. I think last week around also when I was here, I mentioned that we could be spending some time in this 19,300 to 19,600 kind of a band. Again, this is the same zone where we spent about a month from all of August and early September. So even if we keep the news aside and look at purely technical, as the as our guiding light, until the earnings seasons begin, which is tomorrow with TCS announcing its numbers, I think we were expecting this to be a range-bound market. It's just that the geopolitical news gave us that much impetus, and that on the negative side. So yesterday was a buying opportunity. I firmly believe that the near-term bottom for the market is in place, unless of course there is some major news coming in from the US again, or if by any chance this conflict were to expand to other geographies or for a longer duration. Other than that, we believe that Nifty could hold on to those 19,500, 450 kind of levels and rebound from there.
Now, Kush, as far as the war in the Middle East is concerned, do you think that the worst is over? The so-called known unknowns like potential involvement of Iran in the war has already been priced in?
Well, with the caveat that I am no expert on geopolitical matters, if I look at it from purely a market perspective, look, most of the times when these wars or conflicts have come about, they've turned out to be buying opportunities, in the near term, and for sure in the medium term, they've turned out to be buying opportunities. Now, if you see, and from what I've read and seen, in across media houses, the word truce is being used quite a few times already. The fact that they're ready to come on the table and have a discussion is something that I've seen and read. So perhaps if that is the case, then this could just be like a one day fall that we've seen in the market because of this news. Now, if that were to happen, then as I said, that would have perhaps given the market the much needed near term bottom that we're looking at. So as I said, if this matter doesn't really escalate, a lot of it is already priced in, and then we are seeing that today play out not just in the Indian markets, in fact across global markets also we are seeing that play out. Otherwise the reaction could have probably been worse, and we would have seen a second day of fall.
All right. I want to specifically talk about the US Fed commentary and the members of the US Fed, and their commentary seemed to be less hawkish in the past few days. It appears that the long-term yields on the Treasury bonds seem to be, lifting some pressure off the inflation. Do you see a rate hike in the near term? Run us through what your expectation is as far as a rate hike cycle in the US is concerned, and are the inflation worries still a major pain point?
I have no two doubts that they still are a major pain point. Well, I would say that there is a possibility that we could perhaps be looking at the end of this rate hike cycle. We could be nearing the end of the rate hike cycle, but that's not my concern. My concern is that these are measures that typically take anywhere from 18 to 24 months to sort of bear fruit. Now, if we see, it was about the same time, about 18 months, when the Fed started raising rates. Now, if everyone's talking about that soft landing, and if it does come about, then fantastic. But given the kind of treasury yield spikes that we've seen, although they could be slightly more political than just economic, but if those were to continue, and the real impacts of the rate hikes were now starting, we're seeing them to come in now, then perhaps the soft landing narrative might actually be challenged. So more than the rate hikes, which, as I said, is every possibility that we are perhaps closer to the end rather than the beginning, but the impact of all the rate hikes that we've seen in the past 12 to 18 months will sort of kick in now, and that is a bigger concern that I have, as I said, more than the rate hikes themselves.